Something is happening on the Bitcoin blockchain, and this may be the most significant tipping point for Bitcoin since its establishment over 11 years ago. Today, we're going to bring you the data and tell you how to trade this very significant event. I'm Crypto Man Run, and I come to you every day at 10 a.m. EST. But you guys told me that you wanted a quicker show, something like a microdose of crypto content. And so we created a brand new show for you guys. It's called the Banter Brief, and it's going to come to you each and every day at a certain time, which we'll announce. This show is designed to bring you all the market moving news, all the trading information, and tell you how to do it, how to trade this, all in just 10 minutes. So we can kind of talk about this show as, say, a microdose of crypto content. So regardless of whether you're an OG or whether you've been or whether you've just joined crypto, this is where we're going to get our microdose of crypto content. But what I need you guys to do is I need you guys to smash that like, smash that subscribe, so that you know when we're coming on to bring you this microdose of crypto content. So because we only have 10 minutes, let's get on with the big headline today. And that is, of course, the story that the Bitcoin shortage may be imminent. What do we mean by a Bitcoin shortage may be imminent? Well, there's a new kind of buyer in the market today. These kind of buyers aren't in the market because they want to make profits. They're not traders. This kind of buyer is a buyer that's buying Bitcoin for the long term to protect their assets and their treasuries. And we've seen a massive uptick and a massive buying spree from these kind of buyers. It was started by Michael Saylor, but it's by no means limited to that. We had Michael Saylor, we had the Canadian Bitcoin ETF, which raised just $1 billion in a couple of days, and they had to buy the Bitcoin off the market. Then we've had the Grayscale Trust, and the Grayscale Trust is currently holding 655,000 Bitcoin. That's about $30 billion worth of Bitcoin. Fred, let's have a look at the Grayscale numbers. So those are the Grayscale numbers, and what you can see in those numbers is that Grayscale is now holding well over $30 billion worth of Bitcoin. Something to note is that when you buy the Grayscale product, you cannot redeem your shares for Bitcoin. So what you'll realize is that the Grayscale Trust hardly ever sells. In fact, they only ever buy because there's no share buyback redemption. Then we've had other companies adding Bitcoin to their treasuries. We've had Square adding $170 million in their last purchase and $50 million the time before. We've had Tesla. We know that Tesla put about 8% of their cash reserves in Bitcoin. We've got Galaxy. We've got a whole lot of others, as you can see in the slide. And this is a new type of buyer in the market because these guys aren't here to trade. These guys are here to hold Bitcoin forever. And what this is doing is it's causing a shortage of supply of Bitcoin on exchanges. We're seeing a major shift from liquid to illiquid. And that is what it looks like. If you look at the red is the illiquid supply, or the decreasing liquid supply off the exchanges. This represents an amazing shift, because if these guys are going to be holding their Bitcoin, it might be time for us to really buy every single dip. Great, let's get on with the next story in the news. And that is that the most important person in crypto, the world's most important person in crypto, took to the stage for the first time. And given that Gary Gensler is now being appointed, or he is now being confirmed as the chairman of the SEC, yesterday he went for confirmation hearings. And I listened with bated breath to every single word that he had to say, looking for the nuggets of news. Well, was I impressed? Well, let's have a listen to what he said.
Share your perspective on the SEC's role under your leadership, if you're confirmed, and how you will approach digital assets.
Senator, I thank you for that opening. I share your thoughts. It's always important to update our market oversight to new technologies, but I believe foremost to be technology neutral. And I say this because if there's new technology and cryptocurrency and potentially central bank digital currencies comes along, that it's important to stay true to our principles of investor protection and capital formation, but at the same time be technology neutral. So I think that at the SEC, it's really to the extent that somebody is offering an investment contract or a security that's under the SEC's remit and they have exchanges that operate there, then we have to make sure there's investor protection. If it's not that, it's a commodity as Bitcoin.
So I wasn't blown away by his testimony. And the reason why I wasn't blown away by his testimony is even though he is a blockchain professor at MIT and he really understands the technology, he does seem to be wearing an SEC hat now. And he said things like, we're going to keep it technology agnostic, saying that he's not going to pay much attention to technology as much as the instrument. And so this worries me because he is the most powerful person in crypto. He decides whether or not we get an ETF, whether the US becomes friendly to crypto projects that are trying to launch, and he's not coming out wearing a Bitcoin flag. Maybe I should have anticipated that, and maybe my expectations were too high. We're going to dig into that story and a whole lot of other stories on our show, on our main show later on. That show, of course, 10 a.m. EST. Let's carry on with the biggest stories in the news headlines. And this one is a big story. It's a super exciting story for me because it's got to do with crypto adoption and bringing in potentially 300 million, I won't even say users, I'd call them hodlers. And that's because yesterday, PayPal bought Curve. What does this mean? Well, it's a story about mass adoption. If you think about the cycle of any new asset, and particularly Bitcoin cycle, in 2017, we brought Bitcoin to the mass market, and it was met with skepticism. That's exactly what you would expect. You'd expect a brand new asset of this nature to be met with skepticism. 2021, though, is very different. You're talking about the age of mass adoption, mass distribution, and adoption by the banks who are now starting to introduce this to their clients. And when the banks do this, we know we're going to get mass adoptions. But yesterday, something huge happened. We know that PayPal announced a while back that they were allowing their merchants to accept Bitcoin and they were allowing their users to pay with Bitcoin. But yesterday, PayPal announced they bought Curve. And Curve is a massive custody provider. What this means is that PayPal is probably going all in on crypto and building an infrastructure where its clients can now accept, spend, and hold crypto assets, which means that they're no longer just going to be a spending platform, but they're actually going to take on the big banks and anyone else who's playing in crypto. And the reason why I think the story is so big is because I don't think Visa and MasterCard are going to sit there and let PayPal eat the cake by themselves. And so I think we're going to create this FOMO of people trying to offer crypto products to their customers. And I think PayPal's got a great head start. And so for me, this is a huge story about crypto distribution and a potential explosion in crypto distribution coming up now. And if you put all these stories together, you kind of can't see how there'd be a bear market anytime soon. And then the last big story of the day today is about an NFT explosion. Now, we've spoken about NFTs on our show many times. We bought you a live bid for $1 million in a Beeple artwork. For the Beeple artwork, we bought that for you guys on our show. We've been covering the NFT explosion for a long time. We bought you a lot of money last week. But now there's a big story for me, because the big story here is that not only are NFTs exploding and NFT volume exploding. I mean, just have a look at that volume from OpenSea in dollars. And yes, you may say it's coming off a low base, but in January, Fred, if you just call that chart up again, let's have a look at it. In January, OpenSea did over $80 million in NFC in NFC trading. So in February. Whereas in January, they did about $10 million, under $10 million. That's a 10x growth in 1 month. So if you're not trading in NFTs, if you're not getting involved in the NFT exchanges, then you may be missing a big trick. And yesterday we spoke about a hard fork, or a fork that was done on the Cardano network, which was the Merry fork. And the Merry fork effectively allows anyone to launch native assets on the Cardano network. So kind of think about this as launching the ERC20 standard on Ethereum, but now bringing it to Cardano. What it also meant, though, is that you can now launch NFTs on the Cardano network. And that is huge, because the biggest barrier to the NFT game right now is the high gas fees on Ethereum. Because if you're going to buy a $20 NFT or $100 NFT, you're going to end up paying $20 or $30 or $40 in gas costs. But Cardano has very low gas costs. And so I think there may be an NFT explosion on Cardano, and I think it may happen much sooner than we think. So if you've liked that, join us later on for our big show. Our big show starts at 10 a.m. EST. That happens every single day. It's a much longer show with much more insights and much more crypto wisdom. And on that show, I'm going to be sharing with you guys the best trade that I've ever made. I'm Crypto Man Ran signing out, and I'll see you again at 10 a.m. EST.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice.